Hello, everybody. Thank you all for joining. These markets are absolutely, completely insane. Thank you, Anderson W. and Boom and Andy and the mods in the chat and everybody else. Let's jump in. I'm going to talk about why I believe we have multi-month highs ahead of us. And I know it sounds like crazy bullishness, but Bitcoin's above 67,000 again after a $10,000 wick yesterday. We'll uncover that as well, break that all down, and a whole bunch more. But there's nothing but crazy bullish momentum coming our way. So let me get my stuff in order here. Here we are, the multi-month uptrend. And again, it's hard to believe. Like, we've come so far so fast, and we have a long way to go. So happy Wednesday, everybody. Let me see. Crypto market cap over $2.5 trillion. The 24-hour volume, $250 billion. It has been a busy 24 hours, and we all know why. Right now, Bitcoin's over 67K. Dominance 52.6, but some of the altcoins are going well too, and Ethereum's nearly at $4,000. Is not too bad. And fear and greed, as I said, it would tank today. Yesterday was at 90. It fell right down to 75. So let's jump in. And for those of you who, we have a new quote here from somebody from California. A big thank you, James. My NOS is now my highest gains at 100,058%. Bought at 64 cents. Thanks so much. Yes, well done. Every AI is making money, but so is crypto. All crypto, it's all going off. So well done. And don't forget, Bitcoin only playlist right here. You can subscribe above if you're only interested in Bitcoin stuff. We now only have 42 days to go. That's not a lot of weeks, ladies and gentlemen. Not a lot of weeks at all. Let's jump into the news. Let's talk about one thing first, which is kind of happening. And it was unexpected, but it's also super interesting. This is how, Bitcoin made a record high yesterday. Gold did as well, amid so-called policy shifts. So both gold and Bitcoin prices have reached all-time highs despite expectations tied to U.S. monetary policy and interest rate cuts. Typically, people seek alpha in different places when interest rates go down. This is the interesting thing. When interest rates are high, people like to hold cash and get their little 5% while their currency debases at 14%, but that's a separate issue. But this suggests that investors are looking for different alternatives amidst money printing and global uncertainty. And the investment trends in both gold and Bitcoin are diverging. Now, central banks have been buying a ton of gold. The question is, when will they pivot to Bitcoin? That will be an interesting day, ladies and gentlemen. We know there's probably a sovereign wealth fund somewhere buying. We'll also talk about pension funds who want to buy Bitcoin. State pension funds, we'll talk about that too. But again, these are all economic hedges. The world is worried. The world now sees the amount of debt and money printing and debt spirals and interest on debt and everything else. It's like, this is not sustainable. The stuff we've been talking about for years. Now the world is beginning to realize it too. So let's talk about yesterday. What happened? $10,000 wick. Well, it was bizarre how fast it happened. We hit the all-time high, and then immediately Bitcoin fell 10,000 over the space of 6 hours. So they were able to liquidate the shorts at the top when we hit the all-time high, and then liquidate the longs at the bottom. We hit 59K. Went from 69 to 59 in a very short window of time. It was pretty clear when it bottomed, and it was pretty clear that this thing happens all the time. But it was the biggest dip in Bitcoin in over a year, which is nuts. How does this happen? Well, we've covered it many times before. We'll cover it again. This is from Joe Burnett, a very nice summary. I call it cascading liquidations. People have other names for it. He calls it an ugly feedback loop. Price falls. Leverage longs get liquidated. They become forced sellers. Whoever it is, the market maker is set to go in and grab their Bitcoin, and price falls further. And then the less leverage longs get liquidated. So the 10Xs, the 50Xs, the 100Xs get whacked first, and then the 5Xs, etc. And they get liquidated, forces more sellers, and then traders see falling prices and jump on the trend. Price falls further, and repeat until the fragility of this leverage is eliminated. That's how it works, ladies and gentlemen. But that was quite a stunning $10,000 move. But of course, if you're in crypto a long time, you're like saying, yes, time to snipe and buy stuff cheap, and everything followed Bitcoin down. So it's a good time to snag some things like proxies and some other stuff. Anyway, let's talk about the good news. IBIT, $800 million yesterday into one ETF. Smashing records, I think it was about 788 million to be precise. But let's just call that 0.8 of $1 billion into one ETF in a day. All right. This is leading the 9 other ETFs that had a 1 billion in gross flows, despite the reverse guard candle. Okay. And the completely overwhelmed as well, the GBTC bleed. We'll show you all the data for that in a minute, but there's a first taste of how ETF investors are going to be way better hodlers at some point, people think. Remember, the money that goes into these ETFs, it's not for speculation. It's an allocation that will probably stay there for a very long time or even forever. And that's what people fail to realize. Very good thing for the space, in my opinion. Now, paper hands, Puke, and the ETFs buy. Mind-blowing Bitcoin ETF flows again yesterday. Everybody else was buying the dip. The smart people were. Even the people going into ETFs were buying them. And we had record volumes yesterday as well. Again, 37 days in, I think we are at this stage. 37 trading days into the ETFs, and we're still making record volume. That is absolutely mind-blowing. But there's more. Let's talk about this. This is a cool little simple chart here about how we are going into a multi-month uptrend. Because all metrics generally agree. If you look at the momentum metrics on the right, they're all green or neutral. Okay, and this means that we are going into a very large multi-month uptrend, which will likely emerge. Now, several suggest, of course, as well, that we are way higher, way faster than previous cycles. And we shouldn't be this high before the actual halving. But hey, it's the ETFs, everybody. Nothing else. And the 4 metrics that were a little bit red, say we may be due for a pullback, that pullback probably happened yesterday. That was Bitcoin production cost, Bitcoin miner sell pressure, and Bitcoin heater as well. So super fascinating to see this. And again, that's why this video is entitled Multi-Month Uptrend. People are trying to get really cute and saying, oh, I'm going to take profit. You know, I saw it going to 69 and I chased it down and got really nervous and I sold at 65, but I'm going to buy back in at 45. It's like, no. Sit tight, everybody. A lot of good times ahead. In addition, that supports this case as well. This from Caprioli Investments. Price pumps in purple zones, and purple zones last for multiple months. I didn't mean for that to rhyme, ladies and gentlemen. But here you can see the supply delta. It's a more responsive ratio of short-term holders to long-term holders, which helps identify cycle tops. Now, the growing supply delta, green, is very good, but breakouts above the upper band, purple, indicate also very good. And we have both today. And look at history. Look how long the purple lasts. The purple lasts somewhere between 4 to 6 months, sometimes even a little bit longer. And we are heading into that right now, which is extremely positive. Again, way before the halving, way early, but another very positive indicator too. Let's look at the Bitcoin ETF flows. Bonkers day yesterday. Bitcoin hit $1 billion yesterday. Absolutely mind-blowing. Blackrock did 800 million of that themselves, and ETF investors were unfazed by yesterday's dump, and they are still accumulating in earnest. This is a very, very good sign. A lot of people were concerned. It's like, oh, as soon as the new ETF investors see the volatility of Bitcoin, they're going to run away and never touch it again. No, the exact opposite was proven true yesterday. So take note of that too. And another important move, not only do we have all the biggest ETFs and funds, etc., and the Schwabs and Morgan Stanleys and Merrill Lynch's now allocating to Bitcoin, but there's a new cohort joining the family, and they are what's called pension funds. Just in from Bitcoin Magazine, Arizona State Senate is considering adding Bitcoin ETFs to its state retirement portfolios. Why would they do such a thing? The answer is obvious. Many state government pension funds all around the US, especially places like Illinois, are in a terrible situation. Terrible. They have to go out the risk curve. They have to seek alpha to fill the hole. This is the hole. In case you didn't believe me, pension funds are mostly broke. is like at least, and this chart is not up to date, it's a couple of years old, but it's from an old deck that I shared before about the pension crisis that we face. And there's about 2 trillion, probably way more than 2.5 trillion at this stage, of hole within pensions. Now, they pay out to those people on the pensions right now, and the younger people are still paying into the pensions, and many of them will not see anything in the future, unless of course they borrow more money to pay off the pensions. But either way, it's a very scary hole. So that now the pensions have to allocate. This is the game theory of Bitcoin. Once it begins, it will snowball. Say it starts with Arizona, then it'll be Texas, then it'll be Illinois, then it'll be California, whatever. It'll be nuts. And the California CalPERS State Pension Fund already allocates to VC funds, which is way out the risk curve. So they're ready for something like this too. So it'll be interesting. Now, back to Blackrock, because this is historic. Just to put things in perspective, Blackrock bought 12,447 Bitcoin yesterday. All right, that is 14 times the daily supply, gobbled up by one ETF. Good job, Mr. Finkster. In 42 days, that will be 28 times the daily supply absorbed by one ETF. If this does not horrify you, I don't know what will. We are literally getting into that supply crunch way earlier than ever expected. It's going to be bonkers. And remember, Grayscale at this rate will be long gone. So there'll be no dumpage from that other fund too. And it's not just BlackRock buying, ladies and gentlemen. We have MicroStrategy. I always call this financial jiu-jitsu as one of the reasons I love MicroStrategy, is because they do this financial jiu-jitsu. Now, I did post this morning within Patreon. I said, Fed interest rates, and a shout out to Sanjay as well for bringing this to my attention. Fed interest rates are over 5%. Banks land at 7% for 30-year loans, if you're lucky. If you can actually get a loan from a bank these days. We just had a huge bank crisis, by the way. Oh, I forgot to mention. I didn't include it here, but that New York Community Bank just hit the wall too. And guess what loves the bank crisis? Bitcoin. So expect Bitcoin to pump again today. Anyway, credit card interests are 20% plus, and MicroStrategy is going to borrow a big bag of cash at 0.625% rate from the market. Remember, they have a $1.05 billion loan that they borrowed at 0% for 7 years. They're doing it again. And you know what? People will sign up for this because it's a great way ultimately down the line to get access to MicroStrategy stock too. It's genius. They borrow at basically 0%. They buy Bitcoin. Bitcoin goes up. Shares become more valuable. More people have to buy more shares because they're indexed in funds. They're going to be joining the S&P 500 soon. It's just a perfect storm. Genius move by Saylor as well. Speaking of the 9 ETFs, well, again, it's not just Saylor buying and BlackRock buying. But what's really interesting here is you got other players. I mentioned Tether before. You got publicly traded miners. They're trying to hodl as much as they possibly can. And their flow to exchanges is slowing down a little bit. But the 9 new ETFs are nearly now the same size as GBTC. When this all began, GBTC, by my calculations, had 619,000 Bitcoin. Now they're fast approaching 400,000. So they've lost nearly 250,000 Bitcoin. And then the 9 new ETFs will soon surpass them as well. And just to show you for perspective, MicroStrategy is big, but these new ETFs are already way, way bigger. And they are absorbing massive amounts. Quick reminder, they are absorbing 28, soon to be 28 times the daily issuance of Bitcoin. Crazy things are happening. Anyway, the other cool piece of news too that ties into all of this, and I've been the one speaking about Wholecoinership for years and years and years and how important it was way back when nobody listened to me. Thank God I know many thousands of you in this channel have listened to me and probably have whole coins right now. But the rise of the spot ETF and perceived affordability has changed. Spot Bitcoin ETFs like IBIT and ARK, Fidelity, etc. have made Bitcoin appear more affordable to new investors. And believe it or not, there's a crazy psychology back there that when people see, oh, Bitcoin's at 42,000 or 69,000 or whatever, it's unaffordable. But when you can buy a share of an ETF at $35, it's super affordable. And that makes people come back in. So still shout out to all the Wholecoiners. It will still be life-changing in the future. No doubt in my mind about that. But you can see this whole thing is called unit bias on investment choices. And unit bias leads investors to perceive value based on price rather than market value. It's one of the simple things within the brain. And this can mislead them to favor lower price shares under the false belief that they offer more value, potentially resulting in poor investment decisions. Same thing happens, by the way, with crypto. Stocks, people buy penny stocks because they want to get rich quick, but normally you lose your shirt on the cheap things. And unit bias has influenced crypto markets with things like Dogecoins that were at, I can't remember what the price was, but for $1 you could buy millions of them at one stage. And again, it's probably not a good idea, actually, because the meme coins have done really well lately. But the point is, you get what I'm saying. The unit bias is gone for Bitcoin, which means more money will come into it. Very, very, very big point. Not many are talking about. Now, let's look at the numbers, and then we'll look at a couple of charts. Day 37 raw numbers. It is not a bad day at all. You can see here the grayscale fell to $330 million. Again, nearly 800 million flowing into Blackrock alone, 126 million into Fidelity, and nearly 64 million into ARK. Great day for those. A very big net positive of 650 million. Let's break it down and show you all what it looks like across the different charts. This is the macro update. This was the #1 day ever for Blackrock in the history, going back however many days we are now at this stage, 37 days, #1 day. Okay, there's momentum is not slowing down. The second best money flow day ever from 37 days was yesterday. And the total money flow is still up and to the right. And that little blue bar on the right indicates the second biggest money day ever. Red is cumulative dollars. I forgot to add the right-hand axis because they're two different axes right now in this chart. Also, so far, just in those 37 days, we've got 18.2 billion inflows into 9 new ETFs. 18.2 billion. I wish, nowadays people talk about, $1 billion is nothing. $1 billion is still a lot of money. And I forgot to add a visual of how much $1 billion is. But now in 37 days, 18.2 has flown into these 9 new puppies, which is insane. And also that translates to 373,000 Bitcoin into these 9 new ETFs. They have not only absorbed the 207,000 added grayscale, but also added another 165,525 Bitcoin. It is completely crazy how much has been absorbed in so few days. And a visual of how many was pulled from the system yesterday. Remember, if we go back in time, the very first day, 13,496 were pulled. But Bitcoin back then was much cheaper, as 40,000. Now we have the second biggest money flow day ever. And it's only 10,000 Bitcoin. And again, that's still a lot. But remember, Bitcoin is a lot more expensive than 40,000 when this all began as well. So bear that in mind, everybody. As this chart goes forward, the amount being pulled from the system will be less and less. But also, in 42 days, there's going to be very little hitting the system too. Crazy, crazy, crazy time to be alive. This is the most beautiful economic experiment I've ever seen in my entire life, and I'm very excited, and I hope you are too. Hit the like if you are, everybody, because I see the little love hearts bubble up. Let's look at a couple of charts here as well to wrap up and put things in perspective. Bitcoin did have the largest one-day drop in the last 12 months. That was 6.5%. That was nearly 16.5%, 17%. I call it a 20% haircut, but that was a $10,000 wick. And that usually marks the bottom of a market when we have that vicious capitulation. But the V-shaped recovery, we've never seen anything like it before. Literally, this is even better than the COVID times, the C19. I hope I don't get hit by that by YouTube. You can say anything you want on this channel, but you can't say the C19 word. Anyway, there is nothing but pure demand into this thing, despite all those cascading liquidations, taking the price down $10,000 and immediately recovering. And right now, check on the price. Bitcoin still 67.1. Again, hard to believe. Hard to believe. Let's look at one more chart as well. This puppy ain't slowing down. Despite the volatility, Blackrock had that record day. I can't stress that enough. These are all the Blackrock purchases going back in time, and you can see it's up and to the right in a big way. Yes, some days are slow, but some days are extremely fast, like today. In fact, while I'm here, let me check the ETF volumes. Oh my goodness. Sorry, I just checked. BlackRock's already at 40 million, and we have an hour and a half left on the trading day, which means they'll get to 60 to 70 million, which will be another big buying day for BlackRock. So well done, BlackRock. Two more charts. Bitcoin production cost. The Bitcoin broke out of the production cost in recent months, along with ordinal fees and all that type of stuff. Bitcoin mining is now, once again, very profitable. Bitcoin miners are getting whacked. That's why you buy them, because they are going to print a lot of money over the next quarter because of where we are per this chart. As you can see, these breakouts often lead to repricing a lot higher. But the era of Bitcoin value, super true, cheap value, is probably over. Again, we could buy at 15.5, 16, 20 for the longest time, 25. And then once we got through 35K, 42K, and then straight up. So deep value is over, but it's good news for the Bitcoin miners because they can still make a lot of money. I did say, so it was back in 2023, and I said something that horrified a lot of people. I said, if Bitcoin's not at $70,000 by the halving, half the miners will go out of business. As it turns out, we're at $70,000, so that means the miners are going to be okay, everybody. So don't freak out like the market's freaking out. And the final chart of the day, yesterday is all but forgotten. You can see that violent swing. First of all, we had a violent swing up from the 3rd of March all the way to nearly midnight or 12 noon or whatever it was. We hit the all-time high. And then a little dip, and then up again, and then all the way down $10,000. And then immediately afterwards, up again. And that's just how Bitcoin works, everybody. Don't be freaked out. Don't be shaken out of your position. The future is very bright. Multi-month gainers from here on. So don't forget to subscribe if you like Bitcoin-only content or alpha content or whatever. Thank you all for coming. Thank you to the mods in the chat. And I'll see you all tomorrow. Have a good night, everybody. And thank you all for coming. Bye-bye.